Lacy Hunt updated his prediction at what time inflation will be at 2%, based on Q4 GDP data that is deflationary underneath. Thursday morning, new GDP growth came out 2.9%, better than expected, and initial jobless claims was lower than expected too. What does that mean? Does it mean we are all good? Nothing to worry about? No recession? Soft landing? As the Fed promised? Nope. I wish. Somehow the market seems to think so. FOMO and greed is strong. Are you feeling it? Fear and greed index reached at 69 greed. Dumb money is running the show now, as smart money is watching it on the sideline. Why is CTA wrong about TLT in this GDP report? NASDAQ is loving this period of time. It's almost like going back to 2019 again. After taking a closer look at it, it became very clear where this trend is going. What are the signs that we are truly in a deflationary environment right now? What is Lacy Hunt's updated prediction? At when inflation will be back at 2%? I will explain it all right after this. And of course, smash the like button. If you want to be my good boy, apply to write your first book with me. Welcome back to the Audacious Money Witch channel, where we talk about macroeconomy, stocks, bonds, and commodity markets. If you like any of these topics, you are intelligent. That's why you're here, and you know what to do. And push my button if you like what you see in today's video, because I can't push it from this side. This video is brought to you by my Patreon. If you are a good boy, go to patreon.com/magicalgoddesscheryl to add more meaning into your life. If you play your cards right and completely submit like my good boys do, then I will take you under my wing. Author of best-selling books, Goddess Cheryl. My good boys always get rewarded handsomely. You are such a good boy. You like hearing that, don't you? You want to get it into the bookstore. You want it to be real. You want it to be true. You need to be my client, don't you? U.S. economic growth cooled to a 2.9% annual rate in the fourth quarter, capping a year of high inflation and rising interest rates. The 3 months from October to December capped a year of economic cool down from a rapid lockdown rebound that fueled red-hot growth in 2021. Economic output grew 1% in the fourth quarter of 2022 compared with a year earlier. The Commerce Department said that compares with 5.7% growth in 2021 and 2.6% growth in 2019 before the lockdown. At least some of the 2022 slowdown reflected a return to a more normal pace of growth after output surged amid lockdown reopenings with fiscal stimulus fever. Consumers, the economy's main engine, spent a solid pace of 2.1% in the final 3 months of last year. Business investment and government spending also contributed to growth last quarter. Despite signs of resilience, many economists are concerned about the possibility of a U.S. recession this year. They expect the Federal Reserve's efforts to curb high inflation, though rapid interest rate increases will trigger broad spending cutbacks, and job losses. Headwinds from the big jump in interest rates, consumers cutting back on discretionary spending, and weak economies overseas were big problems for the US in late 2022. I expect real GDP growth will likely turn negative in the first half of this year. Recent surveys of US purchasing managers found that higher interest rates and persistent inflation weighed on demand in January. In the manufacturing and service sectors, parts of the economy also showed signs of cooling at the end of last year. Retail sales fell last month at the sharpest pace of 2022. Existing home sales fell for the 11th straight month, and hiring and wage growth eased. The trajectory of the economy largely depends on how consumers fare in the coming months. There are signs consumers are starting to stumble. Shoppers have reined in spending on home electronics, furniture, and clothing after stocking up on those goods earlier in the world crisis. Fed officials are preparing to slow interest rate increases next week at their first meeting of the year and debate how much higher to raise them after gaining more confidence. Inflation will ease further this year. The Fed had initially hoped it could bring down inflation with only a slowing in economic growth rather than an outright contraction, an outcome dubbed a soft landing. If we continue to get strong job growth, and if we continue to get consumer spending on services, and companies don't cut back on capital expenditures, I think that adds fuel to the soft landing story, said Luke Tilley, chief economist. The broader economic toll from rising rates can take months to materialize, but one of the most interest rate sensitive sectors is housing. It shows signs of pain due to rising mortgages. Residential investment declined last year, while home sales fell almost 18% in 2022 from the previous year. Final sales to private domestic purchasers, a measure of consumer and business spending, that gauges underlying demand in the economy, cooled in the second and third quarters of 2022 from previous quarters. The Commerce Department said Storybright Films, which provides photography and planning services for elopements in the Blue Ridge Mountains, photographed 16 couples elopements last year, down from 20 in 2021, said Mark Collett, the company's co-owner. Mr. Collett said his small business received many inquiries and engaged in conversations with a lot of potential clients last year, but more couples expressed concern about their financial situations and ability to pay for a big event than a year earlier. We would even get as far as sending them a contract to book. But then they got cold feet, Mr. Collett said. Now there are signs that Americans are working through their savings. Households saved 2.4% of their disposable income in November, down from a peak of 33.8% in April 2020, as government stimulus left many consumers flushed with cash but few opportunities to spend during the world crisis. Let's dive in a little deeper. Real GDP growth accelerated in Q4. Real GDP is made up of many components, some of which are highly volatile and irregular, and some are core elements. We want to increasingly strip out the irregular elements and work towards the core numbers, and then to the cyclical parts of the core numbers. Consumption plus investment makes up about 88% of real GDP. This strips out government spending, inventory, and exports. This high-level core GDP was flat in Q4 and is only 0.6%. So core GDP is not accelerating and is nearly recessionary. One layer deeper is to stick with consumption and investment, but take the cyclical or leading elements of these two categories. Almost every recession originates in one of three places: residential investment, durable goods consumption, or business equipment investment. Housing, durable goods consumption, and business equipment investment are about 20% of GDP. But this is where the swings come from. Housing, durable goods, and business equipment continue to decelerate strongly in Q4, falling deeply recessionary at minus 3.2%. The most narrow but high-powered part of GDP is just housing and durable goods, roughly 14% of real GDP. The contraction of these two sectors is deeply recessionary at minus 5.5%. So the cyclical and high-power leading elements of the economy continued to decelerate sharply in Q4, while real GDP ticked higher. This means real GDP is supported by non-cyclical or irregular factors, while the engine of economic growth is in recessionary territory. As Lacy Hunt favorite equation from Milton Friedman, it goes like MV equals PT. As we just find out, GDP just ticked higher because of the reduction in demand, reduced the trade deficit, thus added to GDP number. Velocity equals GDP over money. We are having a higher GDP number and lower M1, M2 money supply, or ODL money supply. So money velocity is going up right now. That's why Dr. Lacy Hunt actually changed his prediction, of which the Fed can lower inflation down to 2% from the end of April of this year to the end of June of this year. We know that this GDP number is deflationary underneath. CTA doesn't know. That's why TLT hasn't popped yet. This is my client Teddy Eazzy's book, Wicked Pussy Perfume. It is an erotic novel, such an awesome book. And my book, Rainbow Focus. You are such a good boy for watching my video right till the end. Bye.